Welcome to the Deep Dive. Ready to explore the wild world of global crypto regulations.
Definitely. It's a fascinating landscape. It's countries all over the map in terms of how they're approaching crypto.
It really is. I mean, think about it. You're trying to navigate this new financial world, and every country has its own set of rules, its own attitude towards crypto.
It's like a global puzzle, figuring out where crypto is welcomed, where it's banned, and everything in between.
Exactly. And the impact on the market is huge. So let's jump right in. Let's say I want to invest in crypto right here in the United States. What do I need to know about the regulatory situation?
Well, the U.S. approach is, how do I put this? It's like a patchwork quilt.
Okay, a patchwork quilt. I like that analogy.
You've got multiple agencies all trying to figure out how crypto fits into their existing frameworks.
So not exactly a streamlined system.
Not exactly. It can be pretty confusing for investors trying to figure out who's in charge and what rules apply.
So who are the main players in this regulatory tug of war?
You've got the SEC, the CFTC, FinCEN, and of course, we can't forget about the IRS.
Okay, so four major players. What's each one focused on?
Well, let's start with the SEC, the Securities and Exchange Commission. Their main concern is investor protection. They're looking at whether certain cryptocurrencies should be classified as securities, similar to stocks or bonds.
So if you're launching a new crypto project and want to raise money from the public, the SEC is going to be taking a close look.
Exactly. They want to ensure that investors aren't being misled or taken advantage of. Then you've got the CFTC, the Commodity Futures Trading Commission.
And they're coming at it from a different angle.
Right. They see Bitcoin and Ethereum as commodities, similar to gold or oil. Their focus is on regulating the trading of these cryptocurrencies, particularly in the futures markets.
So different agencies, different perspectives. What about FinCEN? What's their role?
FinCEN is all about making sure that crypto isn't being used for illegal activities, like money laundering or terrorist financing.
So they're the watchdogs, making sure everything's above board.
Exactly. They require crypto exchanges to comply with anti-money laundering and know your customer laws.
AML and KYC, those are the acronyms you hear thrown around a lot in the crypto world.
Right. Basically, it means exchanges need to verify your identity and track transactions to prevent any funny business.
Makes sense. And of course, we can't leave out the IRS.
Well, the IRS is definitely paying attention. They see crypto as property, so any profit you make from buying and selling is subject to capital gains tax.
So even in the digital world, Uncle Sam wants his cut.
That's right.
Okay, so for someone looking at the U.S. crypto market, what's the key takeaway here?
The U.S. system, with its multiple agencies and evolving regulations, can create a lot of uncertainty for investors.
It sounds like it's a bit of a Wild West out there.
Yeah, kind of. It's definitely not as clear-cut as some other countries, and it's particularly challenging with innovations like decentralized finance.
DeFi. Now that's a whole other level of complexity, right?
It is. Think of it as a financial system built entirely on the blockchain, without any traditional intermediaries like banks.
Wow, so it's really pushing the boundaries of what we consider traditional finance.
Exactly. And that's why it's creating new challenges for regulators.
Yeah.
They're still trying to figure out how to apply existing rules to this new world.
It sounds like the U.S. has its work cut out for it. So while they grapple with all of that, let's shift gears and look at a country that's taken a completely different approach, China.
Yeah, China's approach is a lot more decisive.
Decisive? How so?
In 2021, they implemented a complete ban on all cryptocurrency transactions, shut down exchanges, banned mining.
Oh, that's a hard line.
They're not messing around. They see crypto as a threat to their financial stability and government control.
So they're saying, nope, no crypto allowed here.
Pretty much. But here's where it gets interesting. They're all in on blockchain technology.
Really? So they hate crypto, but love blockchain.
It's a bit of a paradox. They've banned independent cryptocurrencies, but are heavily investing in their own central bank digital currency, the Digital Yuan.
So they want the benefits of blockchain, but without the decentralization aspect.
Exactly. They want to control the narrative, the technology, and the currency. It's a fascinating case study in how a government is trying to leverage blockchain technology while simultaneously cracking down on anything they can't directly control.
So we have the U.S. struggling to fit crypto into its existing regulatory framework, and on the other hand, we have China taking a more authoritarian approach.
Two very different responses to the same challenge.
And speaking of different approaches, let's hop over to Europe, where they seem to be aiming for a more balanced and unified approach. So the U.S. is kind of all over the place. China's doing its own thing. What's the deal with Europe? What are they up to with crypto?
Well, the European Union, they're trying to take a more, how should I say it, a more organized approach.
Organized?
Yeah, like they're trying to create one set of rules for all 27 member states.
Oh, wow, that's ambitious. So like a one-size-fits-all approach for crypto regulation.
You could say that. They're working on this thing called the Markets in Crypto Assets Regulation, MiCA for short.
MiCA. Okay, so what exactly is MiCA, and how does it affect, crypto businesses and people who want to invest in crypto in Europe?
Well, the idea is to like create a level playing field,
Yeah.
you know, promote innovation, but also make sure investors are protected.
So kind of like striking that balance between letting crypto grow, but also making sure it's not, the Wild West out there.
Exactly. It's about creating a more stable and trustworthy environment.
Makes sense. So Micah, this big overarching regulation, what kinds of things does it actually cover?
Oh, a whole bunch of stuff like licensing requirements for crypto exchanges, rules for stable coins, those cryptocurrencies that are pegged to like the US dollar or the euro.
Right, stablecoins. Yeah, they're everywhere these days.
Yeah. And the EU is really concerned about, their stability and how they might affect the financial system.
I can see why they'd be worried about that.
They want to make sure stablecoins have enough reserves backing them and, prevent any sudden collapses.
So MiCA is all about bringing clarity and consistency to the European crypto market. Makes sense. But what about taxes? Does MiCA cover taxes as well?
That's still mostly up to each individual country within the EU, but most of them treat crypto gains kind of like profits from selling stocks, subject to capital gains tax.
So even with MiCA trying to standardize things, there's still some variation in tax policies across the EU, something to keep in mind if you're thinking about investing there.
Yeah, definitely. It's always a good idea to, do your research on the specific tax laws in the country where you're operating.
Good advice. Okay, so we've talked about MiCA, the EU's grand plan for crypto regulation, but I have to ask about the digital euro. Is the EU jumping on the central bank digital currency train like China?
Well, the European Central Bank is definitely exploring the idea.
So like China, they're interested in a CBDC, but are they approaching it with the same level of, control?
That's where the differences lie. You see, the EU, they're really emphasizing privacy and data protection as like core principles for a digital euro.
So a digital euro, but with like built-in privacy safeguards.
Yeah, they don't want a digital currency to come at the expense of individual freedoms.
It makes sense. Okay, so we've got the US with its patchwork approach, China going all in on control, and the EU aiming for this balanced, unified framework. It's kind of wild to see these different approaches play out on a global scale.
It really highlights how complex this whole crypto thing is, right? I mean, every country is trying to figure out what works best for them.
And it's not just these big players, right? There are tons of other countries out there, all grappling with crypto in their own way.
Oh, totally. And it's fascinating to see how their decisions are shaping the global crypto landscape. Like, for example, you've got El Salvador.
El Salvador, what did they do?
They took a huge leap and adopted Bitcoin as legal tender back in 2021.
Whoa, that's bold. How did that work out for them?
It's been a roller coaster, to be honest.
Yeah.
I mean, it got them a lot of attention and investment at first, but it's also been pretty rocky.
Yeah, with Bitcoin's volatility, that doesn't surprise me.
And there have been concerns about, financial stability and consumer protection.
It's definitely a bold experiment. We'll have to wait and see how it all plays out in the long run.
Yeah, for sure. And then you have countries like Switzerland, which is known for being, neutral and very business friendly.
Switzerland, home of chocolate and banks.
Right. And now they're becoming like a crypto hub. They've got this clear legal framework that recognizes crypto assets as property.
So they're making it easier for crypto businesses to operate there.
Definitely. It's like they're rolling out the red carpet, but still keeping an eye on things, making sure everything's legit.
So Switzerland's taking a more welcoming approach. What about other parts of the world? Are there other countries that are like embracing crypto?
Oh yeah, Singapore's another interesting one. They're being really pragmatic about it.
Pragmatic.
Yeah, like they're carefully weighing the risks and benefits before implementing any new regulations.
So they're not rushing into anything.
Nope. They're focusing on managing the risks, like, money laundering and fraud, while also encouraging innovation.
So it's not just the big players like the US, China, and the EU that are influencing the future of crypto. these smaller countries are making moves too.
Yeah, absolutely. They're all part of this big global conversation about how to deal with this revolutionary technology.
Yeah, and it's not just about the regulations, right? We got to talk about the risks too. I mean, let's be real. There are risks with investing in cryptocurrency, right?
Oh, definitely. I mean, along with all the excitement and potential, there are some inherent risks to consider. Volatility is a big one.
Volatility?
Yeah, like crypto prices can swing wildly, sometimes even within hours.
It's not for the faint of heart.
Right. It could be a risky game for people who are looking for stability.
Yeah.
And then there's the issue of security.
Ah, yes. Security.
Cryptocurrencies are digital assets, which means they're vulnerable to hacking and theft. I mean, we've seen those cases where exchanges get hacked and people lose a ton of money.
Yeah, it's a scary thought.
That's why it's so important to take steps to protect your crypto. Like strong passwords, two-factor authentication, and maybe even storing your crypto in a hardware wallet.
Hardware wallet. So you're talking about like a physical device to store your crypto offline.
Yep. That way, even if your computer gets hacked, your crypto is safe.
Smart. So we've got volatility and security. What are some other risks people should be aware of?
Well, the regulatory landscape itself can be a risk. I mean, as we've been talking about, the rules are always changing, and that can affect the value of your crypto, how easy it is to trade, and even whether it's legal to do certain things with it.
It's like trying to hit a moving target.
Yeah, and we can't forget about scams and fraud. The crypto space could be a bit of a wild west, and there are definitely bad actors out there trying to take advantage of people.
So it's buyer beware, do your research, and don't invest more than you can afford to lose. Okay, so we've highlighted some of the risks. Volatility, security, regulatory uncertainty, and of course, the potential for scams. But are there things people can do to minimize these risks to navigate the crypto world more safely?
Absolutely. One key strategy is diversification. Don't put all your eggs in one basket. Spread your investment across different cryptocurrencies.
So just like with traditional investing, diversification helps spread the risk.
Right. And only invest what you can afford to lose. Crypto is still a young asset class, and it's volatile. Think long-term and be prepared for ups and downs.
It's a marathon, not a sprint.
Exactly. And it's essential to stay informed. Keep up with the latest developments in the crypto space, like regulatory changes, tech advancements, all that stuff.
Knowledge is power.
Definitely.
Yeah.
The more you know, the better equipped you'll be to make informed decisions.
Okay, so we've talked regulations, benefits, risks. Now let's zoom out a bit and look at the bigger picture. How are cryptocurrencies actually impacting the global financial system? Are they a threat or are they a force for good?
Ooh, that's a question that's causing some serious debate. Some people see crypto as a potential disruptor, like a digital David challenging the Goliath of traditional banks.
A financial revolution?
Maybe. They argue that crypto offers a more efficient, transparent, and accessible alternative to traditional finance.
Especially in places where people might not have easy access to banks, right?
Exactly. It's about empowering individuals and giving them more control over their finances. But of course, not everyone sees it that way.
There are concerns too, right?
Well, yeah. Some folks are worried about the lack of consumer protection in crypto, and the potential for things like money laundering. Plus, there's the whole volatility thing that could potentially impact the broader economy.
So it's a mixed bag, benefits and risks.
It's not a simple black and white issue. It's complex, and we need to consider all the angles.
Think about the potential upsides, like financial inclusion and innovation, but also be realistic about the risks.
Exactly. It's about finding that balance, making sure we're enacting sensible regulations and promoting responsible innovation.
So that we can use crypto's power for good.
Exactly. Okay, now let's look ahead. What does the future hold for crypto? I mean, will it become like the dominant form of currency? Or is it just a passing fad?
$1 million question. What do you think? What are some of the possibilities?
Well, one scenario is that crypto gains massive adoption and just becomes a normal part of our lives.
So like, we're all using crypto for everyday transactions, paying for groceries with Bitcoin.
Could be. Imagine businesses accepting crypto payments, more people using it for day-to-day stuff. We might even see governments issuing their own digital currencies, CBDCs.
Wow, so crypto could become as mainstream as like credit cards or mobile payments?
It's possible.
Yeah.
But there are some hurdles to overcome.
Like what?
Well, for starters, we need more user-friendly applications. Crypto can be pretty complicated for the average person to understand.
Right. Not everyone's a tech wizard.
And we definitely need clearer regulations, consistent regulations across the globe.
To create a more stable environment for investment and growth.
Yeah, exactly.
Yeah.
And then there are technical challenges, like scalability and energy consumption. We need to figure out how to make crypto more efficient.
So ease of use, clear regulations, and improvements in the technology itself. Those are the key ingredients for crypto to go mainstream.
Yeah, I'd say so. But of course, there's another possibility. Maybe crypto remains more of a niche thing,
A niche thing like just for tech enthusiasts or specific industries,
right? It could be that the regulatory hurdles are just too high, or maybe the security concerns never really go away.
or maybe something even better comes along.
Could be. The point is the future of crypto is still uncertain.
It's an exciting time, though, and I'm definitely curious to see how it all unfolds.
Me too. It's a rapidly changing landscape, and who knows what tomorrow will bring.
Speaking of changing landscapes, we've covered a lot today. We've looked at regulations all over the world, talked about the risks and rewards, and even speculated about the future. But before we wrap up, there's one more layer we need to explore.
What's that?
The ethics of crypto. Because, technology is one thing, but how we use it, how we regulate it, those are moral questions, right?
Yes, the ethical dimension. It's something that often gets lost in the excitement of all the technological advancements.
Right. But it's important to think about the impact crypto will have on society as a whole. So let's dive into that. What are some of the key ethical concerns surrounding cryptocurrencies?
Well, one big concern is that crypto could actually make existing inequalities even worse.
How so?
Well, some people say crypto promotes financial inclusion, which is great, but others worry that it might mainly benefit those who are already wealthy and tech-savvy.
So it creates a kind of digital divide, but with money.
Exactly.
Yeah.
If crypto becomes the main form of currency, we need to make sure that everyone has access to the tools and knowledge they need to participate.
So education and accessibility are key. What other ethical considerations are out there?
Another biggie is the environmental impact, especially with cryptocurrencies that use energy-intensive mining, like Bitcoin. I mean, the amount of energy they use is huge.
Yeah, it's a legitimate concern. We can't ignore the environmental impact of technology.
Absolutely. As the crypto industry grows, it's crucial to find more sustainable ways to operate. There's a lot of research going into things like proof of stake, which uses way less energy than Bitcoin's mining process.
So greener crypto is a must. What other ethical dilemmas are we facing?
Well, there's the whole privacy issue. Some cryptos have strong privacy features, while others are very transparent. All their transactions are recorded on a public blockchain for anyone to see.
So it's a balancing act between transparency and anonymity.
Right. We need to figure out where the right balance lies.
Yeah.
How does privacy affect individual rights? What about law enforcement? And how do we prevent illegal activities?
It's complicated.
Very complicated. And of course, we can't forget about the potential for crypto to be used for illegal things like money laundering, terrorist financing, tax evasion.
Yeah, those are serious concerns.
The very things that make crypto attractive to some, like decentralization and anonymity, can also be exploited by criminals. That's why strong regulations and effective law enforcement are so important.
It's a constant battle, right? Trying to foster innovation while also protecting people from those who would abuse the system.
Exactly. It's all about finding that delicate balance.
So we need to be mindful of the potential benefits like financial inclusion and innovation, but also address the risks.
Yep. And remember, the future of crypto isn't set in stone. It's being shaped by the decisions we make today.
As individuals, investors, policymakers, we all have a role to play.
It's up to us to engage in these conversations, think about the big picture, and work towards responsible development and use of this technology.
So that crypto can be a force for good in the world. Well, I think we've covered a lot of ground in this deep dive. We've looked at the global regulatory landscape, talked about the potential benefits and risks, and even dipped our toes into the ethical considerations.
It's been a whirlwind tour of the crypto world, and hopefully everyone listening has learned something new.
The crypto world is constantly evolving, so it's important to stay informed, stay curious, and keep asking questions.
And most importantly, be part of the conversation. Thanks for joining us on this deep dive. We'll see you on our next adventure into the world of fascinating topics.
We've covered a lot of ground in this deep dive, haven't we? Exploring this whole wild world of crypto.
Yeah, from those regulations, across the globe to all the potential and all the risks.
All the good, all the bad.
It's definitely clear that crypto is a game changer, but it's not without its challenges, right?
Definitely not a perfect system by any means.
Yeah.
But, as we're wrapping up here today, I think it's important to remember that technology is only one piece of the puzzle. It's really the human element, the choices we make about how to use this tech, how to regulate it, that ultimately shapes its impact.
Yeah, I think that's a really important point.
And that's where the ethics come in.
Yeah,
We have to look beyond the hype and really think about the potential consequences of this whole crypto revolution.
absolutely.
So let's talk ethics for a bit.
Okay.
What are some of the big concerns we need to address as crypto becomes more, intertwined with our lives?
Well, one major concern is that, crypto could actually make existing inequalities even worse.
Oh, how so?
You know, some folks argue that it can, promote financial inclusion, which is fantastic, but critics worry that it could end up mainly benefiting those who are already wealthy and tech savvy.
Ah, so almost like a digital divide, but with money.
Exactly. If crypto becomes like the dominant form of currency,
Mm.
we need to be really careful to make sure that everyone has access to the tools and the knowledge.
The education, right?
Yeah, education and accessibility, those are key.
So it's not just about the tech itself, but about creating a level playing field for everyone.
I think so, yeah.
What other ethical concerns are on the table here?
Another one is the environmental impact,
Ah, yeah, we touched on that a little bit before.
especially with cryptocurrencies that rely on those energy-intensive mining processes like Bitcoin.
It takes so much energy.
Yeah, it's a big concern, right? The amount of energy used to mine Bitcoin raises questions about sustainability.
For sure. And I think as crypto continues to grow, finding those more sustainable and energy efficient ways to operate is just going to become more and more important.
It's critical.
Yeah.
And there's a lot of interesting research going on in that area. Exploring alternative consensus mechanisms like proof of stake, which uses significantly less energy.
Yeah, I've heard about that proof of stake.
It's a promising development.
So greener crypto is definitely something we should all be advocating for.
Absolutely. I mean, the future of crypto kind of depends on minimizing that environmental footprint.
Okay, so sustainability is huge. What else should we be thinking about, ethically speaking?
Well, privacy is another one.
Right, some cryptos have those privacy features built in, and others are more transparent.
Exactly. And finding that balance between transparency and anonymity is so important.
Yeah, it's tricky.
It really is. We have to consider how different levels of privacy impact individuals, what it means for law enforcement, and how we can prevent those illicit activities.
It's complicated.
Yeah, it really is. There are no easy answers.
And speaking of those illicit activities, another concern is obviously the potential for misuse, money laundering, financing terrorism, even tax evasion.
Right, because those features that make crypto attractive to some, the decentralization and anonymity, can also be exploited.
By bad actors.
Exactly. So that's why those robust regulations and effective law enforcement are so important.
It's like a constant balancing act, isn't it?
It is.
Trying to, allow for innovation and all the good that crypto can do, but also protecting society. So it seems like we need to walk this tightrope.
Mm-hmm.
Keep an eye on the potential benefits like financial inclusion and all the innovation.
Mm-hmm.
But at the same time, we've got to acknowledge and try to mitigate those risks.
Yeah, and it's crucial to remember that the future of crypto isn't like predetermined. It's something that we're shaping with the choices we make every day.
It really is in our hands, isn't it?
Yeah, as individuals, as investors, as policymakers,
Yeah.
we all have a role to play in this.
We do, and that's why these conversations are so important.
I agree.
So let's, keep those conversations going. Let's challenge assumptions, and let's work together to shape a future where crypto is a force for good.
A force for good. Yeah, I like that a lot.
For innovation, for inclusion, for a more equitable world.
For a better world.
Well, on that note, I think we've reached the end of our deep dive into the world of cryptocurrencies.
That was quite a journey.
It was. We started with all these different regulations, in different countries. Then we talked about all those potential benefits and risks and even got into some of the ethical considerations.
It's a lot to take in.
It is, and it's constantly changing.
Yeah. I think the key takeaway is to stay informed, stay engaged, and be a part of shaping the future of this tech.
Absolutely. So thank you so much for joining us on this deep dive, everyone.
It's been a pleasure as always.
We'll see you on our next adventure into the world of, fascinating and thought-provoking topics.
Until next time.
Take care.